on the Vice Chair's new proposals. I also respectfully ask that the Chairman revisit Section 1107A1 of the Dodd-Frank Act to observe that the Vice Chairman for Supervision is authorized only to develop recommendations for the Board and oversee supervision and regulation. The law does not give the Vice Chair special abilities to unilaterally write his own preferred regulations. It does not say that the Vice Chair should unilaterally write public-facing book reports on bank failures or results of climate scenario experiments. Consensus is paramount.
Gentleman, time is expired. We'll now recognize the Subcommittee Chair on Financial Institutions and Monetary Policy, Mr. Foster, for 1 minute.
Thank you, Chair McHenry, and to Mr. Powell for being here today. In the wake of what seem to be endless novel problems and disruption, I believe the Fed and Congress have done a reasonable job given the cards that we've been dealt. Indeed, it looks like the widely anticipated recession from the endgame of COVID disruptions, if it occurs at all, will continue to be more of a soft landing than a disaster for our economy. While there is certainly more work to be done, but in the immediate term, we can reflect with satisfaction on the historically low unemployment, 11 straight months of slowing inflation since the passage of the Inflation Reduction Act. However, I recognize that the necessary monetary policies put forth to combat inflation have not been without stress, including on the fraction of our banks that chose to ignore the Fed's clear forward guidance on that interest rate hikes were in the pipeline. We on this committee remain committed to alleviating the financial stress for everyday Americans to pay rent and get food on the table. I look forward to discussing how recent policies have performed and what else we should do going forward to ensure a strong economic rebound. Thank you, and I yield back.
Today, we welcome the testimony of the Honorable Jerome H. Powell, Chair of the Board of Governors of the Federal Reserve System. Chair Powell, we thank you for your time and being here. We'll recognize you for 5 minutes to give an oral presentation of your written testimony. Without objection, your written testimony will be made a part of the record. Chairman Powell, you're recognized.
Thank you, Chairman McHenry, Ranking Member Waters, and other members of the committee. I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report.
Chairman Powell, if you'll pull the mic closer. Thanks.
We at the Fed remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand the hard conditions that benefit all. I will review the current economic situation before turning to monetary policy. The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the first 5 months of the year, job gains averaged a robust 314,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in April, total personal consumption expenditures prices rose 4.4%. Excluding the volatile food and energy categories, core PCE prices rose 4.7%. In May, the 12-month change in the CPI came in at 4.0%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters. as well as measures from financial markets. With inflation running well above our longer-run goal of 2% and labor market conditions remaining tight, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5 percentage points since early last year and have continued to reduce our securities holdings at a brisk pace. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. And the extent of these effects remains uncertain. In light of how far we have come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the FOMC decided last week to maintain the target range for the federal funds rate at 5 to 5.25%.
Yes, but we know this.
And to continue the process of significantly reducing our securities.
We know this. We know this. This is priced in.
Nearly all FOMC participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at last week's meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess
don't pause like this.
Additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, we will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity, inflation, and inflation economic and
I'll tell you
financial
something
developments.
major. I think that's it. I think the market's reacting well to this.
We will continue to make our decisions meeting by meeting,
Meeting
based
by
on the
meeting, this is
totality
priced
of
in.
incoming data and their
This is
implications
priced
for the
in.
outlook for economic activity and inflation,
This is priced
as
in,
well
bro.
as the balance of risks.
Push these
We
guys.
remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of
Stop it. Stop lagging.
below trend growth and some softening in labor
This is
market
priced in.
conditions.
This is what the market's thinking right now. We know this. This is expected.
On financial stability in the monetary policy report, the Fed, together with the Treasury and the FDIC, took decisive action in March to protect the U.S. economy and to strengthen public confidence in our banking system. The recent bank failures, including that of Silicon Valley Bank and the resulting bank stress, have highlighted the importance of ensuring that we have the appropriate rules and supervisory practices for banks of this size. We are committed to addressing these vulnerabilities to make for a stronger and more resilient banking system.
People are bidding.
We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we
Okay. Translation.
Chairman Powell, as I laid out in my opening statement, inflation continues to be broad-based and persistent, both of which are concerning. Last week, the Federal Open Markets Committee decided to pause rate increases. And at the same time, the committee alluded that it would raise rates more later in the year. And so,
but this
how
priced
should
in. We know
the
this.
FOMC's posture at the June meeting be interpreted? Will the committee continue to raise rates later this year? What's the thinking of this? What are we to understand?
Thank you, Mr. Chairman. So you're right, of course. We did decide to maintain the federal funds rate at its current rate at this meeting. At the same time, participants submitted personal forecasts suggesting that almost all of them thought there would be additional hikes. And I just want to say those two things are entirely consistent. The point being that the level to which we raise rates is actually a separate question of the speed with which we move. Earlier in the process, speed was very important. It's not very important now. The sense of the summary of economic projections and the decision really is just that, given how far we've come,
look at this battle.
It may make sense to move rates higher, but to do so at a more moderate pace. That's really it. You know, we were at 75 basis points for several meetings, then we were at 50 basis points, then 50 basis points, 25 basis points at 3 consecutive meetings, and now we're moderating that pace much as you might do if you were to be driving 75 miles an hour on the highway, then 50 miles an hour on a local highway, and then as you get closer to your destination, as you try to find that destination, you slow down even further.
Okay. So it is more data is necessary for the Fed to make these decisions, and that's one interpretation, but thank you for a broader view there. I also want a broader view on this question of the vice chair for supervision is performing his own personal holistic review of the Fed's regulatory framework for bank capital and liquidity. In an interview yesterday, he discussed some version of a new type of stress test, even, striking complete confusion in his description of it. And at the same time, we have testimony from you, even from the Vice Chair of Supervision, saying that we have a sound banking system that is well capitalized. You will sit in judgment of these this proposal that the Vice Chair for Supervision will bring to the full board on this holistic review of capital. There are a lot of discussions about the amount of capital he's talking about, the concern that this is pro-cyclical at a time where our economy with higher rates is you're measuring what's happening in the broader economy, and at the same time we're going to have a major piece of capital required by financial institutions, which will further restrict lending. So how can you tell us to think about that, given your seat on the Open Markets Committee and as a Fed governor? How would you interpret that?
So I guess I would say you're right. There are a significant number of proposals that are kind of in the works. They haven't been finalized, let alone brought to the board yet, and so I can't really get into specific details today.
Well, we'd like your thinking, Chairman Powell. That's what we'd like.
What I can share is, principles and how I will think about this. Regulatory proposals go to the board. Every person on the board, that's 6 governors now, has an obligation to evaluate and vote on those, and I'm one of those people. I also chair the board. So a couple things I would point out. Just first that, I think regulation should be transparent and consistent and not too volatile, and particularly as it relates to capital requirements. I do note the central importance of capital. We want banks to be resilient to shocks. We want them to be able to lend in good and bad times. We want, in particular, the GSIBs, the 8 largest banks, to have high levels, very
Please don't lag.
high levels of capital and liquidity. Indeed, we spent years raising those levels over a long period of time, and I think there's broad agreement, as you point out, that capital is strong. And, the question there will be what sorts of increases will be justified. That's what we'll be looking at. The other thing is to point out the trade-off between higher capital. The benefit of it, of course, is to have stronger banks that can lend and maybe survive more kinds of crisis environments. But, there are costs as well. And I think it's going to be, as always, a question of weighing and balancing those costs. And that's what I'll be thinking about. The last thing I'll say about that is just we benefit from having banks of all different shapes and sizes in our system, and we want to be careful not to regulate the smaller banks to the point where really their business models are challenged for all but the largest banks.
Well, this committee would expect to see a quantitative analysis of whatever the capital charge is going to be. We would expect that from the Fed, as we do from other regulators. With that, we'll now recognize the ranking member of the full committee, Ms. Waters, for 5 minutes.
Thank you very much.
No, that's it. It's done. That's it. Bid. Are you there? Is my internet on? Hello? Testing. Indu. Looks like we bid. Looks like we bid. Let's consolidate these. Let's consolidate these charts.
I need some translate for all of this.
Hello. Hello.
Yeah.
Yeah, man, nothing to worry about. Whoa, 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 whoa. Nothing that we already know. Like, we already know this. What's new? They're going to increase they pause the rates, but then they are still gonna increase it. They're gonna slow down the closer they get to the 2% inflation target. So big deal. So what we do here is we buy more spot. I'll buy some spot here, I think. Let's buy spot here. Here we go. Market execute, push here. We're pushing here. Let's push it. Done. Done. Deployed. Let's see. Come on. Spot trading. Yeah. Let's see. 1 hour. No, 1 hour looks good. Let's relax, buy a spot here and chill. I'm pushing. Give me a second. Fuck, stop selling on me. Stop selling. See now how everyone starts bidding?
So
Yeah.
we're bullish.
I'm topping right now. I'm buying spot. I'm deploying. We
I'm
need.
telling all.
I'm trying to buy more. Can't you see I'm trying to buy? I'm trying to push 29,500. It's not easy, bro. Come on. Buy, 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 buy. Keep going. Keep buying. This is very nerve-wracking, you know. Buy,
I
buy,
don't
buy,
think the
buy.
price gonna dump, fam.
How can we dump? I'm not like, how can it dump? Like there's a lot of people like me right now. They're trying to break this. Here we go. 29,400 and stop selling. Buy, 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 buy. I'm literally. Can you hear me clicking? Like DCA. Market execute like little amounts at a time. Can you hear that click?
No.
Over. little clicks. Oh my hands are sore. 1 second. I'm like buying $1 at a time, like $10 at a time.
Huh.
It's, and I'm market executing like what $10, $10. Oh fuck! Stop selling on me, you pricks. Can you hear the clicking, Hindu? I long bases on this as well. It wasn't a blind bid.
Look how it pushes the prices up.
Fuck. Keep going, keep going, keep going, keep going, keep going, keep going, keep going. Let's see who is
Powell's
it.
still gonna speak though.
Speak what? He's
He
done.
smiled. Look at the price now. He got a smile.
It's 15. It's 15. No. He only spoke for 5 minutes. That was his testimony. What else can he say that's gonna make the price go different?
Oh well.
I closed it. Look, people are bidding. Come on, come on. Yes, yes. That's it. That's it. That's it. That's it. Break, break, break.
There you go.
Come on. Break, break. So you can hear me clicking in the $10 bids. Like, fuck. Because I don't trust the machine, like the AI, when it bids for me. Let's add some more futures a little bit. Oh, fuck. My arms are sore, bro. Oh, for fuck. Maybe 100 here. Maybe 50, 10%. Wait for this candle to close, I think, for me. For futures. 15 is bullish, fam. I want to move my stop loss on that to 28,732. 28,732. Confirm. And then on my spot as well, bear with me. Fuck. And then on the hourly.
Are you putting?
What? 27,834. Give me a second. I'm pausing for a bit. Let me put my sell order first. at 31k. 20. Let me first put my stop loss here. $27,829. That's my stop loss for spot, and my take profit is going to be on weekly is going to be 31,261. 31,190. Okay. What the heck? Hang on. 28, 27. No, it's conditional. 27, 829. And then, what do you think? Bull run or not? We're selling this at 42k?
That's the weekly?
Yeah. Nah, I'm gonna sell it at 30.
It didn't do like an SFP on the weekly, right?
No, it's not. Why?
Never mind.
31, 30,000.
Owl is just stressing out.
Tell him to stop stressing out. I'm selling at
Yeah,
40.
we didn't even move from 29.5. Like,
Is it still there?
still on 29.5, yeah. Like, 2943.
Alright. I'm going back in.
And it's going lower a little bit.
Don't say that. It's a very hard work trying to defend this. Alright, I'm back in.
Like, are you making $10 orders to deploy more orders than a month?
Yeah, $10 small hits, but
Oh,
in a bigger size. Fuck. Who the fuck
What?
is selling? Fucking assholes. Give me a second. Let me see. Is this a losing war or not? No, we're buying, see?
We're dying.
No, we're not dying.
We never die.
15 minutes. I think you just relax now. Okay, now I'll take a break and wait for this 1 hour to close, and then I'll top again. See what happens when you stop topping. CVD spot. No, still curling on 15 minutes. What the fuck? Why should I give a shit here? Where's the resistance? Here. Well, no, we still got time. The 1 hour is the only one that matters. Alright. GG. 13 minutes, huh? What's the 4 hours looking like? Man, that's an engulfing candle. Unless we close like really like a dragonfly doji in 1 hour and 12 minutes, then I don't see BTC slowing down. So I'll keep up the good work, huh? Fuck. You think it? If Al was here, he'll be. Because someone's gotta absorb these hits, the $10 hits. Maybe I should change it to like 100 to make the price go up a bit faster. Yeah, too slow. Give me a second. I'm gonna get my calculator out. I'm not gonna count there. 10,000 clicks. I haven't even done that much clicks yet. This is how you sneak, like using volatility, right? Like using volatility to sneak your orders in. I don't want my name, or I don't want my order to pop up on on AGG, yeah, above 100k. You know that's what happens, right? Like when they
So
target
you're
you.
spreading them like in packages.
Yes, not even above 10, not even above 1k. Right? Otherwise you're in big trouble. Like this, right? It's green. Like this, right? Look at these. So I'm fighting against that. These are like smaller orders. Big orders, small orders. Boom, 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 boom. See? I'm not gonna make my name pop up here, bro. Slowly sneak like a ninja. Okay, back to clicking. The attack on 29,500. Remember this day, my bro. I contributed to the bull run, yeah? This is breathtaking. Maybe I should put some on GMX to buy. What's GMX pricing like? No, who's selling at a good price for me? Coin? Nah. Who's Binance? It's Binance that's bidding today, bro.
Ooh.
It's Binance. It's Binance. Binance is gonna spark the bull run.
Buy.
Yeah,
Binance?
I'm not joking. It's Binance. Binance is bidding today. Look at this. This is Binance. This is Binance, bro. The proof is in the pudding, they say.
Will I get stopped on Binance? No.
I wanna add take 28 732 is 25.
I will be out in 10 minutes.
Do your
5
thing,
minutes,
bro.
something like that, yeah, so.
Do your thing, bro.
I entered BTC for now.
Yeah. I got your back, like literally, I do.
After the scandal closes, if the price will not raise a much higher, I will push some price again. Like I will add to my position.
You will add to your position if this candle closes higher, yeah? If this closes here, right?
Yeah, in the
On
proper
the
way.
hourly? Yeah. Looks good, bro. I would put my stop loss just here, because you wouldn't want it to go under 28,465 anyway. Otherwise, we'll start accepting below.
Yeah.
In 7 minutes, I'll add to my trade, and then in 7 minutes, I'll add again to my futures. I'm already done with my spot for now. Like I want to catch them off guard, Whittleton. You know what I mean? Like, I'm like a little snake,
But they didn't take out those shorts yet.
They did. Those shorts are gone. Those shorts are gone.
Or did they?
We did. That candle, that hourly candle beforehand took everyone out. Every single short. But there were small positions. They're not closing it yet. The one that we want to target is 29,820, and that's what the bears are doing right. The person who has their stop loss there is selling right now. Does that make sense? And right now I'm trying to push it to go there, and right now I think I deserve a break. I still got like around 9,000 clicks to go.
Take it easy.
Or I'll start deploying in like $50. Because I don't want to be wrong, bro. You know what I mean? Like, what if I lose the war here and the damage will be like minimum? Are you gonna come back later?
I don't know how much later, but basically, yeah.
Okay. Post us your trades, man. Like, you took Pepe. I didn't even know. Was I asleep when you took Pepe?
It wasn't. Yeah, it was like at night before I went to sleep. I put small amount. It was a good and nice, comfy seat over there, so I took it.
Man, you're starting to have some confidence to start deploying altcoins, and I'm even afraid to deploy altcoins.
That's the problem, because I don't know if it's a good thing or a bad thing, Like, this is a...
No.
Like, if I'm...
Sorry, I'm in the middle of drinking. I was gonna say that's a good thing. You know why? I still have fee. You have no fee.
I think it's because of the amount, the amounts of money I'm working with, because I actually know, I have no idea how I will react when I will trade with $1,000. I haven't been there, so I don't know.
You wanna find out?
Not yet.
I gave you 50 and you still haven't traded that.
Never. Told you, it's in my spot, waiting for you.
Deploy BTC on it, please. Buy BTC, help me. Buy BTC.
Nope. Nope.
It's just gonna be chilling there, huh? Let me know when you deploy.
USDT forever.
That's like the NFT that I gave you. Even if it goes to like 10 ETH, I won't sell it. I should have gave you an NFT instead.
I have 1 or 2 tigers that I might sell if it goes to 10 ETH, but I will rebuy again.
You're rug pulling people now, huh?
Nah.
Nah,
We're not playing those games.
We don't play those games.
Well, I hope that at the end of the day we're good. I know we're good.
You know how happy Mirza will be if it ever goes to 10 ETH. Shout out to Mirza.
Yeah, it will be huge.
Yeah, but what if it goes to 10 ETH and ETH is $1?
Oh no! It's Al. Ted.
Yeah, I just finished work.
McDonald's.
Perfect timing.
Milkshake and McDonald's.
Perfect. Just in 3 minutes before this close. Do you have the balls to take this trade out? That's the question. Putting your stop loss right under this super trend right here. Not even like 5% risk, bro. It's Bitcoin.
Alright.
Hey, not financial advice, but I've been swapping $10 like for the last How long have I been doing it? Ever since Powell stopped speaking, yeah? Fuck you, bears. Stop selling. Just give up. Well, I'll tell you what I'm gonna do. After this hourly finishes, right? And it finishes off as a hammer like this, okay? I'm going to stop for a bit and I'm going to let the bears take over. And after that, when it gets to the conversion, I'll bid again. How does that sound? Sounds like a plan, I think, Indu. Indu the assassin.
I think Emperor BTC posted something
Hmm?
about the Bitcoin.
Who posted?
How it might just Emperor.
On where? On Telly? On Telegram or?
Yeah, I'll check it out.
Oh, sorry, it's not. Yeah, here we go. Bye bye, BTC bears. These guys are gonna take over the whole industry. Oh, liquidated shorts on Pepe. Pepe is running, Barif. It's running. Minimum pullbacks. Yeah, that's my target too. He's not wrong. I'll write like, I know I'll put like 40k on my stop loss. I mean, on my take profit on my spot, but
We're looking at the hourly, right?
yeah, 41 seconds. Look, it's working. The top is working. Keep in mind, it's not only me that's topping. It's a lot of people right now that's topping. Our topping means timely weighted average pricing,
Ah,
but I'm doing it manually because I don't trust AI. You you know when people swap, right? You buy every 10 minutes and whatnot, and here I am. Ooh, here we go. That's a good close. I'm happy with that close. Did you hear what they said on the? Obviously you didn't, Al. But um, holy shit.
There's the running.
They're gonna employ. See, now the stop loss, if you were to enter this one, has to be 28,739. 28. Just out under here, just a little bit here. 28,716. What the fuck? 28,732. 28,779.
Wow,
Boys,
it's at 600. It's going to hit 30 today, I
fucking
reckon.
bro, are you serious? I told you it's gonna hit it in a couple of hours, man. Of course we're gonna fucking hit it. If we hold up, if hang on, what was that close? Is that an hourly close above 29,551? I think mission complete from our end. I think I'm gonna go take a fucking break and let the plebs buy for now. Oh fuck. You should have seen AGGR, bro. That's you should see what the market looks like right now. I'll show you, Al. Do you know what that is?
No, what is it?
This one. Big
That's
orders.
pretty cool.
Yeah, this is how you see big orders. You see bears right now getting liquidated there for big
Oh, fun.
money. No bears, no bulls getting liquidated at the moment. Anyway. I want to start buying calls as well, bro. I think it's cheaper for me to buy calls. Let's read what Emperor BTC has to say while I'm queuing for Dora. Because I'm waiting for that juicy 2 hour. Okay, first and foremost. Hang on, Emperor. OI decreasing and market buys increasing. Early shorters stopped out. Could be a move powered by leverage, but on-chain analysts saying it's spot focused because it is. Small OI increase. Small OI increase means more shorters stopped. Market buys unable to push. The price past weekly POC, which is what 29291, which obviously we pushed that. Daily level Fibonacci ideal pullback for continuation. Price increase. If you're a scalper now, we can accept pullback for a spot long. Keep your euphoria in check. Highs. Continuation play would go long around pullback zone and waiting to see what New York does. Well, this is New York and it hasn't pulled back. Yeah, that's that. Give me a second. I'll be off YouTube stream, but I'm